G'day folks, welcome back to Pete's Investing. It's April 26, 2024. This is the Magnificent 7 analysis, namely Alphabet, Google, Amazon, Apple, Meta, Tesla, Nvidia and Microsoft. Here's our heat map of the trends on the monthly, weekly, daily. So you can see they're predominantly bearish, although longer term most are still bullish in terms of movement, and looks like they're all turning to a bearish environment. So we may see a bit of a further downturn in the markets, driven by the Magnificent 7, as we all know. So Google or Alphabet on the monthly, weekly, daily trends, bullish on the monthly, bullish on the weekly, and bullish on the daily as well, with a nice big bullish candle on the last day of trading yesterday. Now, if we go to the daily and hourly charts, I do look at the hourly, even though you might be trading these on a daily basis, I do look at the hourly to find any, because the hourly charts have generally more divergence. Now you'll notice here, this divergence on the CCI has been invalidated. So I'm going to delete that. So long as that CCI remains below that entry point, that's a divergence. In this case, it's spiked higher than that entry. So we're going to invalidate that. And likewise, we're going to delete that Fibonacci and divergence on the hourly time frame. You can trade those divergences, but I generally use them as a potential turning point. So you can see here again that there, I'm still going to consider that a double top on the CCI versus higher highs. Let me just pull that up there, and that trend also needs to go up there as well. So that's still a double top on the CCI on the daily level versus the higher highs on the price. If that goes any higher than that on the daily, we're going to invalidate that as well. But at the moment, the hourly is being invalidated. So again, with this, just to emphasize how to trade, predominantly if you're trading on the daily time frame, for example, referencing the hourly as well for any downturn, we like to trade in the direction of the weekly and preferably the monthly. So you can see there when it broke above on the monthly, that's where you could have taken those long trades based on the weekly. And if I zoom out on that period there, that's the July 23. So go back to July 23. You could have taken these long trades during that period on the daily. Next, we look at Amazon. So again, on the monthly, bullish, weekly, it's broken into a neutral. And on the daily, it's broken down into a bearish momentum. Now notice we had a bearish divergence back here over those months versus higher highs in the price, and that actually came down and hit our target area in that smaller time frame. On this one, we're looking at a larger pullback down to this area around the 155 level, between the 139 and 155 level, and that's a Fibonacci retracement back to this low of the 23.38% level. So if I draw that Fibonacci just for reference on the daily, that should have been, let me redraw that, that's wrong. So if we draw that up to the 38% level and the 23 to 38%, that's the larger time frame. Now if you go back to the daily and hourly charts, again we've got a bearish divergence, had a couple of bearish divergences there. That one, the first one hit our target. The second longer term one has also come down and hit our target area. And now we're looking at a bounce potentially. So you got the higher lows versus lower lows on the price, and that's a bounce, and it may have already hit that. So if we draw a Fibonacci on that hourly from that low to that high, you can see there it's already penetrated the 23.38% level, and it's gone as high as the 61% almost. If it breaks much higher than that, it's going to be a lot more bullish, but at the moment it could actually retrace back down towards a bearish momentum. So I'll keep an eye on it in the coming hours. Next, we'll look at Apple. On the monthly, it's big bearish divergence, and that's still in play. Hasn't broken down yet, so just be careful about going long on Apple. On the weekly, it's also a bearish divergence, but this one actually came down and hit our target area. And on the daily as well, that's same as the weekly, that's actually broken down, hit our target area. And more recently, on the daily, we've got a double bottom or a slight bullish divergence on the CCI versus lower lows on the price, and that's our target area. We expect to bounce into that area as a minimum. On the daily here and the hourly, again on the hourly it's important to note we've got a bullish divergence versus lower lows on the price, and if we're to draw a Fibonacci retracement going from that low, let's take it back to that high, that'll be the target area as a minimum. So 23-38% level, that's where we're expecting it to reach in the coming hours possibly. So again, doesn't necessarily mean a full scale reversal, could just be a bit of a retrace before taking further downside. But at the moment the CCI is still rising in line with the price, and we expect it to hit this area as a minimum. So Meta or Facebook looks like it's been bullish on the monthly, not showing up on the CCI indicator. On the weekly it's broken down into a bearish signal, and that was due to this massive bear candle on a couple of days ago. And you can see there we drew a target area between that low and that high versus this bearish divergence that hit our target area. So let me just delete that retracement. And at the moment the CCI is still dropping off, even though we had a bullish day yesterday. So it's hit our target area. What I should have mentioned as well, if I go back to that low, to that high, it bounced off the 50% level, and if it breaks much lower than the 61%, we're going to get more bearish outlook for Meta or Facebook. On the daily and hourly charts, and I'll keep the daily in here just as a reference point for the hourly, but you can see there we had a divergence here. That was our initial target area, and in terms of next level, I'm going to bring it down to there. You can see there that actually bounced off the 61% almost. We had a gap day to the downside, touched the 61%, then bounced up from there. So again, a very weak signal that we may see further downside. So again, I'd avoid going long until we see, especially the daily, start breaking up and break above this resistance at 523.50. So here we've got Microsoft. On the monthly it's bullish, on the weekly it's broken down into a bearish signal, and on the daily we've been projecting a bearish divergence for a number of months, and eventually it's broken down, hit our minimum target level. That's a 23-38% level of that Fibonacci range. You can see there it's actually hit it twice, but then on the last hour of trade it made a big bullish movement to the upside. On the daily and an hourly, again on the hourly it's hit our target area, broken well below it, went as far as the 61%, and it's bounced up from there and made a couple of gap hourly moves to the upside. So again, I'll keep an eye on that, but at the moment I'd suggest it's a very bearish outlook so far, and it may well break below that 61% of that Fibonacci range. So Nvidia is bullish on the monthly, it's bearish on the weekly, and been bearish on the daily for a number of months with this bearish divergence. You can see there it hit our target area, that 23-38% level, and it's actually, let me draw the from that high down to that level there. You can see it's broken down below the 38% level, and it's bounced off that 38% level. So again, next level will be below that 61% for any more bearish outlook. So at the moment, you're careful about, all these are showing bearish trends at the moment mostly. On the daily and hourly charts, again you can see there on the hourly we had a couple of bearish divergence. More recently, that double top on the price, that was a bearish divergence there, versus those lower lows on the CCI. And at the moment, that CCI is actually trending in line with the price, so no divergence to talk of there. But again, that's looking like it's weakening. It's gotten down, it bounced off that 38% level. So we need to track it and see if it breaks much lower than these 50 and 61% to be more bearish on it. Lastly, Tesla, bearish on the monthly, bearish on the weekly, and it's fresh breakout to the upside on the daily. So it's a bullish movement on the daily. Now there was a bullish divergence, and that's actually starting to play out as we speak. So you can see there that divergence would have extended to that low, and that trend line would have stretched to that low on the price as well. Let me get this Fibonacci to redraw to that point. So that, let me just delete that rectangle and draw a new target area. Looks like it's already it's already hit that 23% level. So that 38% level. So again, I don't trade these. I use them as a potential area to get out of. In this case, if I was going short, I would have looked at that and said, okay, there's a potential reversal, get out of the short trade. You can trade them, but as you can see, they're pretty fast sometimes, and so on the hourly especially. But you can trade them, especially on the daily. Generally, they do move a lot slower. To support us small, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.